attention to chart data, or more precisely commitment of traders and sentiments, not sentiment cycle, but the state of affairs, I'll put it that way. I've got a confession to make. Ash and I were having a conversation last week, or I was promoting the conversation about, and Ash and I talk a lot about this, and it is not the sentiment cycle, but market sentiment per se. And one of the currency judges of sentiment cycle, in both our opinions, is, and it's something that we watch quite closely when we're talking about this, it is the Aussie versus the yen. Now, last week, Ash was telling us the commitment of traders was definitely down on the Aussie and up on the yen. And if you have a look at the Aussie yen charts, you can see exactly what transpired there as the Aussie fell away in dramatic fashion. I had an inflection point here that I was hoping, well, not hoping so much as thinking that there was a bounce left in this. I was wrong, and the data was right. Let's see if the data is telling us something just as pertinent this week. G'day, Ash. How you doing, bud?
Oh, very good, mate. Yeah, and I think that's a really nice lead into what I was going to discuss, because I was going to talk about the Aussie, because interestingly, it's the Aussie which is probably giving us the most significant data this week, apart from Bitcoin, which has got negativity right across the board. Look at the shorts on that, you know, and it's not really something that I would usually focus on, but the main reason is it's right next door to the Aussie, so it grabbed my eye that the sentiment in Bitcoin, the index on the 3-year is down to 0, and the 18 months is at 0, the 6 months is at 0. Massive change down in the shorts. So the shorts have actually extended their positions by 210% on Bitcoin. Now, if we flip down, and that's just really something for people's back pocket, and what you do with that must be part of when you read the other indication that you would be trading with Bitcoin. You must kind of like try and knead this in, for want of a better word, to your analysis, because that would suggest going long at this particular phase would be hyper dangerous. But you need to kind of read the fear and greed index and many other aspects of Bitcoin to decide whether you actually want to take the short on. You know, it might just be that people have made enough money going up that they're taking a bit of profit. Now to the Aussie. The Aussie is the other one that is at the extreme. So Bitcoin's at the extreme because it's at the zeros. The Aussie's at the extreme because it's at the 100%. So the 18 months, so we're looking at the 1.5 year period, 100%. The commercials are bullish, and the 6 months is 100%, which they're bullish. But the significant one is this 36 years. Sorry, the 36 month, which is the 3 year, which is now at 80%. Now, I want to see it at 80% and north before I consider the data to be in the extreme band. Obviously, the 100% is the absolute, but as soon as we get to 80% and above, it starts to look like it's in the extreme band, and we can see that the pickup in the longs in the Aussie is really significant, and the drop down in the short. So there's the direction of travel for the bulls and the bears is certainly passing. It's not just the bulls are driving it up, it's also that the bears are coming out of their positions. So it's certainly now suggesting that the Aussie has probably done its major move to the downside. Now we know that the lockdown is an issue, and that's potentially why we've seen the Aussie driven to the downside. But if we go back to the conversation that Geoff was talking about with the Aussie yen, you know, being a proxy for the stock market, if you like, it's almost like the sentiment gauge, Aussie being risk on, yen being risk off, then this would suggest that a lot of that bad feeling that was really manifest in the market towards the latter end of last week is probably a bit overcooked. You know, and if we think about the stock market and kind of roll this in, then the stock market is overvalued. You know, the US stock market is overvalued, and the Fed released some minutes to kind of bring in some fundamentals. The Fed released the minutes from the July meeting, And even though it was relatively hawkish, they didn't really say that much. And the fact that the market reacted in the way that it did was really a buying opportunity. And I was on a call on Friday with Lewis and Helen, and also with Lloyd. And I was saying to them, both, you know what, this is a buying opportunity for the FTSE here, because the market had come down sufficiently on something which was not, it didn't have any meat on the bones. Now, if we also think, and I want you guys to put the date in your diary for Thursday, the Jackson Hole Symposium is to begin. And that would start to make me question, why would the dollar rally through a break level with such an important meeting coming up? And back to the Aussie, why would the Aussie continue to tank to the downside? Why would the stock market move sufficiently lower when we're probably going to get a little bit more clarity on the Fed's particular stance here? So this would suggest now that if the Aussie can form some kind of bottoming pattern over the next couple of days, so Monday and Tuesday, there may well be a buying opportunity, and the buying opportunity could manifest itself into something quite significant if the Fed come out and say something relatively benign or even fairly dovish. Then you would probably see the Aussie rally a bit, because what I am seeing is that the charts are they've probably overreacted, and these overreactions, if they line up with things like the COT data suggesting that there's still a lot of positivity out there for the Aussie dollar, then they do provide an opportunity to buy. So this week, we're probably looking for an opportunity to buy the Australian dollar. If we look at the seasonal aspect of it, the seasonality doesn't really, it doesn't fully agree in September, but we've got a couple of weeks until then. There's a suggestion here that it bottoms out a little bit towards the end of August, a small rally before a big drop down. So if we're talking about a week-on-week basis, it would suggest that holding on to the Aussie dollar beyond the end of the week would be something that needs to be managed. Not dangerous, but if you manage it correctly, it may well be a decent opportunity, because you might see a big explosion to the upside. But it does also suggest that needs a big slice of caution when you go into those positions, and to make sure that you probably want to be safe before Thursday arrives. The issue is going to be that the Jackson Hole Symposium won't end until the weekend, and then you might get some gaps down. So be very, very careful trading anything and holding it over the weekend. But if you've got your money management right and you don't over leverage your account, then there may well be some opportunity. So just to sum up, mate, the opportunity this week is pointing at the Australian dollar. And considering what we've got coming up, it would also suggest that it might even be a fair trade to trade it against the US dollar, because the US dollar has seen that rally off very little information.
Interesting, mate. I was a little bit surprised, not so much at the Aussie's decline, but the size of the decline because of the COVID. But I was more so surprised at the Kiwi when we had one case of COVID. And yes, we had RBNZ coming out, and RBNZ was supposed to, according to the economists, raise the interest rates by 0.25%. And it was deemed by the journalists, I suppose, but certainly market commentators, that the COVID outbreak in Auckland, which at that stage was one case, would sway the RBNZ to not raise interest rates. That turned out to be the case. Whether they were going to or otherwise is another story. But I was very surprised that the Kiwi would drop so quickly, and as far as it did on the back of that. Perhaps it's a dollar story because the dollar was strong.
I don't think so, mate.
Combined. No,
I don't think so. I mean, I was looking at that story as well, and the way I read it was that the UK has got 30,000 cases, but has not got an economy which is shutting down. The RBA, the New Zealand economy may only have one case, but they went into lockdown. So as soon as any country goes into lockdown, it's going to affect the price, of the currency. So when I looked at that, I was actually just writing something up and just thinking, actually, I'm quite bullish on the Kiwi. But in the short term, I think we should be looking at a sell-off in the Kiwi because you don't lock down and don't get some kind of reaction to that. And there's Jules giving me the thumbs up.
He's agreeing with you 100%. And I totally get that. But in my mind and to my mind, that provides a buying opportunity a little bit down the track.
I agree. Totally agree with that too. He's giving you a thumbs up now.
Happy days.
Getting the seal of approval from the soothsayer. So we'll have that.
There you go. Yeah. Looking for lows and higher lows off that, I think might be an appropriate situation. Yeah,
just be careful with the timing. I think that's the key. I think if you're to Jules's point earlier on about gold. If you think that the Kiwi is going to be much higher in a year's time, then who cares what the price is? If you manage money correctly, who cares what the price is when it comes down? But if you're looking for those short-term opportunities, then your timing does have to come into play.
All right, mate. You've got 1 week's respite left before we're back in battle mode. What are you going to do with that?
I am going away to the Lake District next week, mate, for a few days, about 5 days, leading up to the start of September. So one more little staycation I've got booked.
Perfect. Enjoy. We'll catch you in a week or so.
Thanks, buddy. See you soon.